All right, so let's start off with a very easy one here. Number one, deferring your income. Now, I like to think of this as pushing income off of your tax return this year and reporting it at some point in the future when ideally you may be in a lower tax bracket. So look, the more income you earn, the higher your tax bracket will be, and the more taxes you will pay on certain portions of your income. But when we defer some of that income, we can immediately reduce our taxes. So for example, let's say a portion of your income is taxed at 35%, and we'll just use $100,000 of income here for simplicity. Well, if you did absolutely nothing, then you would pay $35,000 in taxes on that portion of your income. But if you deferred that income, you would immediately save $35,000 in taxes. And let's say in the future, you withdraw portions of this income when maybe it's taxed at 12%, for instance, which means that when all is said and done here, you would only pay $12,000 on taxes on that same amount of income, saving you a net of $23,000. So in